Welcome traders, David DeBay of Polaris Trading Group. In today's PTG educational video series, we're going to take a closer look on a brand new trade setup we've recently instituted with our members called the Trifecta. And today's trade example will be in replay mode using the Sierra Chart trade platform, focusing on the NASDAQ 100 NQ, and the trade date for this example was Friday, April 6th, 2018. Before we get to the trade example, industry regulations require that we highlight NFA compliance rule 2-29. In summary, states that hypothetical performance results have many inherent limitations, and which of some you may actually see here on our trade example. Trading in futures and options on futures is speculative in nature and involves substantial risk of loss. Be sure to trade money you can afford to lose, and past performance is not indicative of future results. So with that behind us, let's take a look at the trade example. Okay, on this next slide, this is a completed look of the Trifecta short trade setup that we're going to take a closer look at today, and we'll talk about the development of it and how this unfolded. So I wanted to give you a look at how the completed trade looked before we went to the details of as it was unfolding throughout the day on Friday in our trade room. Okay, so now we're back to our simulation mode here on the Sierra Chart platform, and this is going to be the setup of the trade. Okay, so price had been going through a consolidation sideways period for a bit of time throughout the day, early morning, and then as you can see, prices broke below shown support here, and this begins our setup. So there was actually a trend shift, so that's number one on our Trifecta list. We need some sort of a trend shift. And then in that trend shift, we also have what we call an ATR, an average true range shift, denoted by the red background here, colored background, as well as our ATR line. Okay, and then the last part of the signal will be when prices pull back, so we get what we call our first pullback, and we also have an extreme signal on our first pullback. So that sets up our trade signal, our Trifecta 1, 2, and 3 components, and then we also will be looking for what we call our premium signal. Okay, we're also going to be using our Auto Trade Assistant, our ATA, which will help execute the trade for us. That executes via specific trade guidelines and criteria. So we'll show an example of that. So let me start the projection here, and we're going to just kind of speed it up a little bit. All right, so as we walk through it, and I will pause it as necessary. So as you can see here, prices had pushed down, and they're going to be making somewhat of a low here. Okay, and then they'll start retracing back up. So this is what we want to be looking for. All right, and as you can see right here, all right, that star tells us that the oscillator has gone to an extreme condition, which is one of our components. We have a trend shift, and we also have the ATR shift. So we have all three components in place at this point. And now what the system will be looking for, it will be looking for our premium signal, and once it has its signal bar, it will automatically place the orders and trade it on our behalf. So let's watch that unfold. And again, there we go. So now the orders are placed. So let me just pause the projection here for a quick moment. All right, so as you can see, there's our premium at 65.58, and we have an arrow that points to the signal bar, and now the orders have initially been placed based upon that signal. And again, in our auto trade assistant, we also have auto position sizing that will and manage the trade for us. Okay, so we'll just let that run. Okay, we got triggered off here at the 55 quarters. Okay, stops automatically placed, and then 3 subsequent targets are placed as well. All right, and we'll just let this run a touch. Okay, our first target had been hit. Now the way we have it set up here at our first target is to take 50% off. So out of the 6 contracts, you can see that 3 were bought. And once we've hit our risk-free level, we have our stop loss level, which is automatically adjusted to the entry. All right, so that's based on user input, and that will help manage our trade. So we'll lock in at least some profits should the market bounce back up to our entry. Ideally, we want to be able to get the subsequent targets down below. Target 1, T1, which is a 2R value, and then T2 down here, which is our 3R value. So in our auto position sizing and exit distribution, 50% comes off at the first risk-free level, and then the last 3 contracts are subdivided to the next level, and then if we get a runner for the last one. So let's let it play out, and we'll see how it unfolds. Okay, we already know how it unfolds because I've shown you what the final look of the trifecta trade setup. There's trade number 2. Okay, so at the 2R value, which is target 1, and then the last one we have a runner. Now in a future version, at this point, once we've reached the actually second exit, which is our target 1, we don't really consider the risk-free level target 1. We just consider that as a risk-free, taking half the position off. And target 1 will be where we're gaining some alpha, all right, on our trade. And then in a future version of our auto trade assistant, we will have a auto trailing stop. We don't currently have that, but that will be an upcoming update. And then once we've reached target 1, so this way we can use a trailing stop to get a runner going. At this point, I already have it pre-designated to exit at the target 2 level, so we'll just let that ultimately play out. And as we know, that one did get finally triggered off for all 3 targets. Okay, so there's our final target that got hit, and as you can see, nice clean trade. Now this is how our trifecta, again we have 3 components where we have to have a trend shift, we have to have an ATR shift, and we have to have an extreme pullback condition for a premium in the case of a sell or a discount in the case of a buy. Alright, so this is a new trade setup that combines all our featured components and all of our trade setups that we've been trading now for a number of years. This is specifically focused on the NQ. The NQ, as many of you know, is a very fast contract to trade, right? High volatility, high beta. Using the auto trade assistant really can really help in that regard of execution. Sometimes getting a proper execution in the NQ can be quite difficult. But the auto trade assistant, exactly what it's designed to do is to help us or assist us in executing the trade. Now just one last caveat about the auto trade assistant: it is not in any way a black box. So it's not one of these tools that you just turn it on and let it run all day long and you're going to be real happy. It is an assistant, so the operative word is an assistant. So the trader, being a discretionary trader, using computer automation to help them or assist them in trade execution, specific trade criteria it really helps in that regard. Okay, so if you've enjoyed this video and you want to learn a little bit more about what we do here at Polaris Trading Group, and give us a call at the number shown below for additional information. Drop me an email and come in and take a look at what we do. All right. Hope this has helped, and best to all of you with your own personal trading. Thanks very much for your attendance.